Hey folks, welcome to our first video of the new year. And I wanted to make it an appropriate video. And what I mean by appropriate is that I am focusing a lot on risk management, more so than usual over the past couple of months, and especially going into the new year, because I am somewhat bearish on the overall market. So that being said, I have a problem child trade, and that problem child trade is an iron condor, which I opened up about 25 days ago. And we've made some money on the call side of that iron condor, but the put side of that iron condor is creating a bit of a challenge for us at current. While it's not in the money, it's very close to being in the money, and we need to establish some sort of a game plan so that we are protected as best as possible anyway. So let's first talk about the things that I look at to divine whether or not I'm going to take action on a particular trade. Now, INTU is a great company, great balance sheet, great fundamentals. I'm not worried about the company per se as an ongoing concern or having a major sell-off in and of itself beyond the rest of the market. What I am worried about is the overall market rolling over and taking INTU down with it. So we look at a few things. Let's take a look at the macro. So the macro here is the triple Qs. And you can see that we opened up on the day and we are now down on the day. That's a bearish reversal. It's a continuation pattern of what we've seen of late. So going into 2025, what is the market telling us? It's telling us that what we had in late 2024 is continuing into 2025. So as goes the market, so goes INTU it. We need to make that assumption. Now, volume on the day is going to be about on par with the past several days. It may come in at average, slightly above average to the downside. Not something you really want to see on a week that is historically a light volume week due to the holidays. You're seeing distribution of late, and that's concerning. Now, what else I'm concerned about with risk management is the fact that we have the yield curve, which the 2-year is now flat on the day. The 10-year is red. So we actually have the yield curve is actually pulling back fractionally on the day. This was going in the opposite direction only a few minutes ago. So we have the 2-year now unchanged on the day. The 10-year is down on the day. So that takes a little bit of pressure off. Now, taking a look at INTU it, we want to know when earnings are. When I went into this trade, I wanted to make sure I didn't have to worry about earnings. I don't want to worry about binary events, which you can have a rip your face off experience if you're wrong on the trade. So earnings come out on the 20th of February. We have plenty of time. Check that box. That gives us breathing room. What does seasonality look like? Well, seasonality, the first week of the new year, is historically going back 13 years. This is using TrendSpider. 13 years is not a good week. It's not great. Up less than 50% of the time. But that changes over the course of the next several weeks where you get some strong price action. And in fact, we're up week 3, 85% of the time going back 13 years. So do I necessarily want to roll the put side out in time? I prefer not to. But if we close where we're at or lower on the day, I'm going to need to take action. And that means I'm going to need to roll the call strike out in time. And that'll provide us a little bit more insurance on the trade. Now, taking a look at Intuit, here's the weekly chart. And again, we want to take a look at the macro view. How are we setting up here? Are we seeing weakness or are we seeing stability? Well, we have new weekly lower lows. In fact, we've taken out the lows of December today. January the 2nd, the first trading day of the new year, we've taken out the lows of December. So not only do we have a new daily lower low, not only do we have a new weekly lower low, we have a new monthly lower low. That's not good. So I'm concerned about protecting my position. So the game plan here is this, and we're going to wait until the final minutes of trade. I may even be doing it live today with members during the close. Let's take a look at a 15-minute view. You could see some stability here. They may rally it. This chart looks very similar to that of the triple Qs at current, so maybe they rally it. So I don't want to do anything right now. I want to see the quality of the close. But while I'm not going to press the execute button on Thinkorswim, what I will do is have a game plan. And the game plan is this, is to roll out of our current position the January 24, 25 weeklies, 690 strike, which is our short call. And I'm going to roll out into a 20 delta. Basically what that means is for every dollar move that the share price makes, the option that I'm selling makes a 20-cent move. So that's a 20 delta call spread. So the 680 call I will be selling. I'll close out the current 690, reestablish at 680. So I lower the strike. I go further out in time and I generate a credit of around $1,000 of additional protection to protect that short put that we have on. Now, we've already collected premium on one tranche of call options. We closed that out. We rolled down to our current call position, which is at, again, the 690, and we're up on that by about $600. So we'll collect more credit and we'll continue to manage the position as closely as possible. But the game plan is to wait until the final minutes of trade, and then we'll make the decision as to whether or not we want to roll down and out our call position and perhaps take some of that credit and buy a deeper out of the money put position to add extra insurance against the Intuit trade. It all depends upon the intensity of the close today. If we see big volume selling on the market and on Intuit, then there's a good chance we're buying puts immediately below to protect even more so our position. It's all about protecting your downside risk. You always want to live to play another day. That's what we're doing. If you have a question, leave a comment below. And members, I will talk to you during the close and on Market Wrap. Till then, be well.